And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's our global simulcast. Scarlet Fu joining us in the TV studio. Massar and Tim Stenovec in the radio booth as we welcome our audiences across all of our Bloomberg platforms and, of course, our partnership with YouTube. Carol, it's hard to really keep up with this market. I was trying to count, and last count I had, you had at least 30 directional changes on the S&P 500. I just stopped counting after 30 here. As of right now, we're in the red, but if you blink, that might push into the green over the next minute and a half.
Yeah, you made me want to once again check out the volatility index, the VIX. Actually, a little bit lower today. So go figure. This is again a market that makes us scratch our heads, and it's also a market that makes us rethink how high we can go when you look at the U.S. Treasury curve.
Yeah, no question today. All about the move in rates. Still, can't ignore what's happening in the equity market. We did speak to Jimmy Lee over at Wealth Consulting Group. He's the founder and CEO there. And I posed the question to him, okay, we're about 3.8% from all-time highs on the S&P 500. He says, these are the dips that are the opportunities to get into the market. You know, if you buy now, he says, there's a good chance that by the end of the year, you'll be higher.
Guys, the 2-year yield hit 5%.
I know. I didn't want to steal it. I didn't want to steal it from Alix. That's like
But it's worth mentioning that the MOVE index, which measures volatilities in treasuries, is at the highest since early January. Yeah. So it's been pretty much a straight shot up over the last couple of days.
What I'm interested in knowing is that what is today, April 16th? What was yesterday? Tax day. So if we take a look at the last couple of days, was there tax force selling, and is that why we're seeing more of a calm today? I genuinely have no idea, but is that also part of it? And maybe we do continue to get more of a buy the dip.
All right. Well, those comments by Jay Powell certainly put a pretty strong bid underneath some of the safer haven assets, a bid to the dollar, a bid to gold. That sell-off in treasuries continues, and a mixed day for the U.S. equity markets. The Dow Jones Industrial Average higher on the day, up by about 63 points, or about 0.2%. The S&P 500, which oscillated between gains and losses all day long, down 0.2% on the day. The Nasdaq down 0.1%, and Carol, the Russell 2000 down on the day by 0.4%.
All right. As we know, we are in the midst of earnings season. United Airlines just crossing. Let's go to the red sticky, as we like to call it here at Bloomberg. United Airlines first quarter adjusted loss, 15 cents a share. The street was looking for a loss of 57 cents a share. So that certainly looks like a much better number. Looking for the trade now up about 1.2%. The company also double digit and boost in business demand quarter over quarter, saying the demand environment remains strong. Looking at first quarter operating revenue, $12.54 billion. That was better than what the street was expecting of $12.44. Alix.
Yeah, let's just get some information here on some aircraft deliveries. So the company's saying in the short run, they expect a small number of aircraft previously scheduled to enter into service in the second quarter to now be pushed into the third quarter. They say it's going to have minimal impact on the company's capacity plans, but the CEO, Scott Kirby, talking about the fact that their fleet plan is changed on the reality of what manufacturers, aka Boeing, are able to deliver.
Yeah, he said we'll use those planes to capitalize on an opportunity that only United has, profitably grow our mid-continent hubs and expand our highly profitable international network from our best in the industry coastal hubs. The company noting that it converted a portion of Boeing MAX 10 aircraft orders to Boeing MAX 9 from 2025 through 2027.
And worth mentioning as well, United has quantified the cost and the revenue impact from the groundings of those Boeing MAX 9 aircrafts. It's about $200 million. The stock moving slightly higher in after-hours trade right now.
Yeah, I was also taking a look at the idea of sort of what the actual yield they get out of, and that continues to rise, showing that they still have some degree of pricing power. And then we also look at like load factor, which is also up back above that 80% threshold after being below that for the past few quarters here. So on the whole, this looks to be pretty solid.
Yeah, the other thing I was going to say is I think sentiment has been a little dour, to say the least, when it comes to United. I mean, the stock's a little changed year to date here in 2024. But having said that, 5% of the float was shorted. So I think there were expectations, especially surrounding that loss number, that maybe things wouldn't be so great. So to see it, yes, reporting a loss of 15 cents a share in the first quarter, that adjusted loss, it was much better than what the street was forecasting, which was a loss of 57 cents a share. So you are seeing maybe some short covering, if you will, but you're seeing United Airlines up more than 4% here in the aftermarket.
And just to continue, though, on the actual planes that they get, they say that they're in letters of intent to lease about 35 new Airbus A321neos, which is also quite interesting. And they're also converting some MAX 10 aircraft orders to MAX 9. So just details about how they're rejiggering their fleet based on what's going on with Boeing.
Yeah, the Airbus A321neo neos, of course, are the Airbus equivalent of the 737 MAX aircraft. The company also saying due to manufacturing and certification delays from prior years, by the end of 2023, the airline's contractual aircraft commitments for 2024 had increased to 183 narrow-body aircraft. And then also noting that following the 737 MAX 9 grounding and the FAA's announced significant production capacity constraints on Boeing, the company now anticipates 61 narrow-body aircraft and 5 wide-body aircraft to be delivered in 2024.
And worth noting as well, when it comes to the full-year outlook, United says it expects adjusted EPS of $9 to $11 a share. Analysts were looking for $9.43, so certainly the higher end of that full-year forecast is what people are paying attention to. And I mentioned that $200 million impact from the grounding of those Boeing 737 MAX 9s. They say that without that grounding, the company would have reported a quarterly profit for the first quarter.
Yeah, it'd be interesting to see, too, what they have to say about the regulatory reviews. And, of course, we're all sort of awaiting what's going to come out of this hearings on the Boeing whistleblowers and whether that has any blowback at all to the airlines or whether that gets contained to just Boeing.
Yeah, a lot of questions. But when it comes to it, too, right, we care about what they're saying about demand. And they're saying the demand environment remains strong. So some outlook, and we know a lot of people are flying around. So getting some context, certainly, when it relates to the overall economy.
I'm also interested in how much they're having to pay pilots to fly right now, how demand for
or
pilots.
not to fly, right?
Exactly. And exactly what's happening when it comes to capacity and when it comes to the scheduling changes they've had to make in the wake of those manufacturing challenges that the company has had.
You guys might have mentioned this already, but I wanted to do it again because I find it interesting, is that they see double-digit percentage boost in business demand quarter on quarter. That would be huge, right? Because that's going to be the front of the plane. That's the premium. That's where they're going to make the most revenue, et cetera.
I thought business travel was done. Everyone just zooms into stuff
No,
all the
apparently
time.
double-digit percentage boost in business demand quarter on quarter, Romaine.
Yeah, right now, we're just taking a look at those shares. They continue to move higher here, and we should point out that in after-hours trading, 3 of the 5 biggest movers right now are in the airline space. Some other earnings crossing the wire right now. This on J.B. Hunt. Those shares slightly lower here after EPS for the most recent quarter came in below estimates, $1.22 a share. The street was looking for $1.53. Operating revenue also a miss, $2.94 billion. The street was looking for roughly about $3.1 billion there.
Yeah, whether it's dedicated contract revenue or the operating revenue, both of those numbers missing. So as a result, J.B. Hunt reporting revenue down for a 5th straight quarter. Although, according to analysts, they do see revenue picking up this quarter in the second quarter, but that's working off a lower base.
No, that's a really good point. And their revenue was expected to show another decline, as you said, Scarlett, the 5th straight quarter of decline. But what's interesting is they talk about low spot rates, competition within the space, the intermodal space, continuing to weigh on the trucking companies. So some of that's certainly playing out in some of the numbers. J.B. Hunt shares down about 0.7% here.
Now, how does that square, though, with some of the data we got on retail sales and some of the other goods-related businesses here? I mean, if we're seeing this type of softness in a company like J.B. Hunt, which in theory is transporting a lot of those goods, do we need to brace ourselves for maybe a downside surprise in some of that economic data?
Or is it just lumpy? Or are we just learning that this is just kind of lumpy demand and then lumpy inflation? They do talk about operating income, and they see higher professional driver and non-driver wages and benefits and equipment, but then lower rail and truck purchases also. So again, it's an idea of things are lumpy, whether it's a demand or growth perspective or a price perspective.
Yeah, in the press release, the company saying that the decline in revenue primarily driven by a 9% decrease in segment gross revenue per load in both intermodal and truckload, 22% fewer loads in integrated capacity solutions, and a modest decline in average trucks and productivity in dedicated contract services.
So that's load declines.
Yeah.
Yeah, I mean, we're talking 9% drop there. And then even on the dedicated contracts, which I thought was interesting to see that go down about 2% here. That seems to go back to the issue here that they're just moving fewer goods. And I guess whether this is specific to J.B. Hunt or to Alix's point, whether it's just kind of that ebb and flow, that lumpiness, if you will, remains to be seen. But we're going to get the other trucking companies next week, so we'll see what happens.
I just want to update you guys on United Airlines. So they see the second quarter adjusted earnings per share for $3.75 to $4.25, just kind of blowing past estimates there any way you slice it. They also still feel very confident in their full year adjusted earnings of about $9 to $11. Again, just blowing past estimates here. Really solid quarter.
Yeah, and American and Delta are saying thank you, United. American's up about 1.7% in the aftermarket, and same story for Delta. So we're seeing a lift to the overall trade. All right, guys, that's a wrap. Earnings, certainly the airlines, J.B. Hunt, something we'll follow into the Wednesday trade. A wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Beyond the Bell. We'll see you again, same time, same place tomorrow.